Welcome to Picture Perspective. My name's Jordan Kennedy. Today, we're here to talk about our economic outlook. Cameron Curko in the hot seat again. Let's get into it.
Sounds good.
Before we kick off, just a reminder, this is general advice. Should you wish to seek personal advice, please reach out to your advisor. So Cameron, inflation, the word on everybody's lips. What's going on? What insights can you give us?
Yeah, so look, the Iran conflict's a key driver of that globally, and that's because the Middle East isn't just a big source of energy exports, it's also things like aluminium, fertiliser, even to make copper randomly, you need sulfuric acid, and the Middle East is a big source of that as well. And it's also a major trading hub. So all these factors are starting to trickle through the economy. We all saw the first hit in the Bowser, and you've seen companies like Woolworths and Coles recently warn about the flow-on effect to households that's coming.
Domestically, do you think we're going to be able to wrangle it?
Look, Australia's in a better position than most. We are a wealthy country. No quibbling about it, and we will be able to find the supplies. So we'll be able to muddle through. I'd be more worried if I was in one of these chiefly importer countries, so the likes of India, Pakistan, much of Southeast Asia, quite frankly. They're going to be at the front line, and it's going to be a trying time.
Let's swing to the RBA. Obviously, we've just had a recent interest rate increase. Lots of talk that the only tool in the toolbox to fix inflation is the RBA increasing rates. What's the journey we're going to go on?
So this is going to be a tricky one. If you look at consensus estimates, they're expecting inflation to peak in and around June this year before gradually easing off. But we're going to see some pretty decent downside risks. So, for example, we were just talking about Iran, that's a big one, but it's also to what extent does the RBA's hikes already in play slow down household and business demand, quite frankly. The fact that you've got state governments doing handouts, we also don't know the budget implications as well. These are all factors that could see the RBA hiking further, and they've definitely reserved the right to do so.
Yeah. And last one in the sort of technical bunch, the AUD, obviously with the oil shortage and people worried about travelling overseas, the counter is happening when you look at the dollar. Aussie dollar's appreciated around the world. What's going on?
Yep. So with currency, everything's relative. And the fact that we're one of the few central banks that's hiking quite drastically relative to other countries, all else being equal, is great for the Aussie dollar. It makes us more attractive to speculative inflows because people can earn a higher rate here. So that's really been I'd argue, the biggest driver here. The second factor has been we are a commodity producing nation. We produce a lot of stuff the rest of the world needs, and that need has only been growing in recent months for things such as copper. Now, with what's happening in the Middle East, coal as well is another one, our natural gas. So you take those all together, it's the governments and us as a country, it's technically the good times. It won't feel like it, but in terms of revenue coming in, that makes us attractive. There's a lot of things in the AUD's favour.
Lastly, some interesting stock stories. Obviously, we've seen a lot of volatility in the markets. Are there some war stories that you want to share with us, some things to watch out for over the next period?
Yeah, so it's been a painful confession season. So the likes of Cochlear and then more recently CSL. You're seeing a lot of countries blame the conflict for different reasons. For example, I did not know down to the detail that Iran accounted for something like $50 million worth of revenue for CSL. I would not have guessed that going into this whole saga. We're going to see a bit more of that, I think, come through. The consumer impact's going to be really interesting to see how it plays out. Like, gut instinct would say households will see some substitution effects, but it won't be too drastic while the labour market remains as tight as it is. Like, people will draw down on savings, and importantly, enough people in aggregate still have jobs that a bunch of these companies will hold up okay. Although one left field factor, and you've seen it globally with memory prices for things like DRAM and the like, you're already seeing JB Hi-Fi and some others warn about input costs skyrocketing. So things like PCs and electronics, you might see a bit of an impact there, and it'll be interesting to see what the likes of Apple and that does.
And do you think every business is going to be able to be fixed by AI? I know that's what's fixing the labour issues or the labour costs for a lot of businesses that companies are pointing to.
Well, I think yes and no. The reality is it's too early to say. We have seen a lot of companies call out AI savings, and I think that impact has definitely been felt more at the junior level. You're seeing some consultancies, for example, being forced by clients to basically bake in those savings into contracts already. You're seeing some law firms flag it as a reason for lowering their grad intake. AI, but the cynical part is AI is also a good excuse for some actions that companies were already going to take. So a good one is WiseTech was in the headlines for
half their workforce.
Effectively nearly that much. And a lot of that's actually got to do with they did a big acquisition in the US that brought a lot of new staff, and to realize what companies call synergies, like they were always going to retrench a lot of that workforce. And so AI, I definitely would agree, is part of that, but a big part of it is just standard corporate M&A.
Yeah. Cameron, always interesting perspectives. Thanks for joining in today.
Yep, thank you, Jordan.
Thanks for tuning in. Like and share. Look forward to seeing you next time. Thank you.